Hi, this is Chris from thetraderguy.com taking a look at the dollar yen pair. It is February 26th. It's a Sunday actually, so the markets are closed. But a lot of talk has been going on about the dollar yen pair and what the recent moves are about. And the biggest problem that you have with Forex is that's essentially what people will worry about. They'll worry about the why and not so much the what. Because at the end of the day, it's sometimes it's hard to remember this because we all get beat up in the markets from time to time. But really, it's about selling when price is falling and buying when it's going up. The why doesn't matter, and in fact, it's trying to figure out why the market's doing something is a bit of an exercise in futility under most circumstances, just simply because you're trying to identify human behavior through thousands, hundreds of thousands of participants. And as I'm sure you can imagine, if you think about it, that's pretty much impossible. So let's take a look at what we have technically. And I may say one or two words about the Bank of Japan, but truthfully, it's the technicals that really matter at the end of the day. One thing that you should notice on this, and this is the dollar yen weekly chart, we had this wicked hammer. And if I remember correctly, there was a central bank intervention that week. You can see that the pair shot straight up to about the 85 mark and then eventually fell back down to this level again. Now, we have violated that level at one point or another, through this range here, but the spirit of that area still held true. And what's interesting, before we've had this recent rise, we had another hammer right at the same level. Now, in full disclosure, I didn't take that hammer, and a couple different reasons why. Number one, it's counter trend, and the more I trade, the less I trade counter trend. It's very difficult to pick a top or a bottom in a market. But looking beyond that, what else had me kind of leery about doing that was the fact that we had the shooting star the week before. Now, I understand it isn't the shooting star that everybody likes to see, when you get a nice rise like that, and you see the shooting star here, and then you see it fall, and that's what everybody wants to see. But if you think about it, the shooting star, it means the same thing. Essentially, that week, we had a rally, and that rally was turned around. Just as in the following week, the hammer, we fell and then we turned around. Well, you got to realize everybody that rallied in this pair, that bought this pair, is losing money, and everybody sold it the next week was losing money, and that's what gets the market to run one direction or the other. Now, with the Bank of Japan expanding its bond buying purchase program, that does flood the market full of yen, and it should, in theory, bring down the value of the yen. But the truth is that we had a report come out that the Japanese exports had fallen significantly to some of the lowest levels they've seen in years. That is very poor for the Japanese economy. And another thing you have to keep in mind is that Japan exports, or imports, I should say, 100% of its energy that is non-nuclear. Currently, there are this is off the top of my head, I want to say there's like 56 nuclear reactors in the country of Japan, and only 2 are online. So they are importing energy, and that is really, really starting to hurt in Japan, as I'm sure you can imagine with the oil spikes that we've seen lately. So we have some reasons to really be very suspicious of the Japanese economy. Okay, so now over the last couple of weeks, and for a second I'm going to ignore this candle. At the end of the week before, we saw it close at basically the highs, but 80 was a very obvious spot. This past week, we shot straight through it, and you'll notice we're closing at the highs again. This, to me, looks like we are in the process of changing the trend. And when I say changing the trend, I mean changing the big trend. Switching to a monthly chart, you can see we've got a few more days left in the month, but that's a pretty significant move. It also sets up to show you how significant 80 was and how significant 85 will be. If we can get past 85, we may get some real legs to this move. Now, currently, the trend is still down. We can't say that it's changed already, but notice what happens. Again, I'm doing this from memory, so you'll have to forgive me a bit here. Notice what happens when I start plotting moving averages. Sorry, there's the daily is what I notice this on. 200-day moving average. And let me go ahead and zoom out so you can get a good look. Notice that 200-day moving average is turning up. I am not a moving average trader per se, but a lot of people are. A lot of people with large money are. So I at least pay attention to them in that sense. So let's go ahead and put the 100-day in orange. You can see it's turning up as well. And this caught my attention. Go ahead and change to the 50-day in red. And you can see that it has crossed over the 100-day and it is reaching towards the 200-day. That gives this a little bit more legitimacy to trend traders. And as I zoom way out, you can see that these crosses don't happen very often. And the very definition of a trend for some people is going to be every time that the three averages are turning in another direction. The red, in this case, the 50 and the 100 cross over the 200. It doesn't happen that often. And in fact, back there, it probably happened, barely, but it happened and we moved down. And you've got to go all the way back to middle of 2008 to see the last time we crossed like this. We'll see. The near future is really important. So this could lead to a rather significant rally. Again, you guys, anybody who follows me knows that I'm not really a moving average trader per se. But enough people are that you have to at least be cognizant of them. Looking at the weekly again, here's 100-week moving average. You can see that we are approaching that as well. I don't necessarily give that as much credence, and as a result, you can see that it looks like some momentum's changing. Zoom in a little bit here. So now the question remains, what do we do with this here? I'm not a big counter trend trader, but I have to admit that these moves don't happen very often, and when they do, there's almost always something to them. So now we got to look at previous resistance at the 80 mark, and I have this as an area where I think if we fall, and we could, because we're kind of at a minor area right here as denoted by the weekly shooting star there that we fell from, that's really going to be the challenge. So if we pull back here, I expect to see 80 hold up as a little bit of support, and if it doesn't, then definitely 78. So I'm kind of in the camp of, let's see if we get a little bit of pullback and some sign of strength, either based upon 80, which would be ideal, or 78, or one of the moving averages I just showed. Looking at this chart, you can see that the top of this shooting star is right around 8151. So 8150. So 8150 really is the next hurdle to climb. If we get above that, then it looks like 85's where we're going. Will it be choppy? Yes, it'll be choppy because this is a trend changing event. If you look back at, I think it was 95, the move was really herky-jerky for a while before the dollar-yen climbed and started to take off. And I think that's what we're starting to see here. The Bank of Japan has clandestinely admitted not too awfully long ago that they were intervening in the market. Can anybody say 76.50? That's a little obvious there. And as such, I think the Bank of Japan is going to win this one. They do over time win this one. I know a lot of people talk about how central banks, if they intervene, it's just an invitation to go against them. But we're starting to hear a lot of professional traders talk about the long run that the yen's had may be just about over. Looking at the Fibonacci studies from the plunge down, we look at this, and what catches my attention immediately is that the 85 level is basically the 50% retrace. So for us to bounce from here to 85, it won't be a straight line, but let's just say we kind of consolidate in this area. It'd be very similar to the action we saw down here, and not out of the realm of possibility, and even at that point doesn't necessarily change the trend depending on who you talk to and how they define it, but this is still considered a pretty significant correction. So at this point in time, I am very pro dollar yen, and I haven't been for a very long time, so it's interesting. Now, As a side note, the yen in general is getting crushed against a lot of currencies, and if you want to see currencies that can really put a waxing on the yen, I would suggest looking at CAD yen and Noki yen, which is the Norwegian krone, NOK. If the oil markets keep spiking the way that they have been, remember Japan imports all of its energy, and that includes crude oil. So, NOK JPY will be an interesting pair, and then of course CAD yen as well. Of course, there's some funky things going on in the dollar CAD, basically because it's been flat even as oil's been spiking. So out of the two, I would if I was going to play the oil play, I actually like the NOK JPY and have that on my radar as well. But the dollar yen, by all measures, has broken out of a serious consolidation level, and the fact that it's closing at the all-time highs, pretty interesting. We may see a run from the yen as a safe haven currency to the dollar as a safe haven currency. So let's keep an eye on any pullbacks and see if we can get up to the 50% retrace. If 85 gives way, I'd call for 95. I don't know if it'd be short order, but I think we would hit 95 eventually as well. There's a really good chance that we may see a long and protracted run up for this pair. Certainly, after this type of action, something's changed.